Sidis. I'm the founder and CEO of ArabNet. It's great to have you with us for this installment of Ramadan nights with new venture capital funds. And the concept of this series is really based on the idea that there are a lot of new funds that have launched in the region in the last 18 months. And we wanted to have the opportunity to introduce those new funds, their mandates, and get to hear from these fund managers about their new directions, their strategies, and maybe help you understand if they might be a right fit for your startup or your investment opportunity. Today, I have the privilege of having with me Jenny Ahlzen and Fida Taher, partners at Amam Ventures. Welcome, ladies, and great to have you with us. And I'm going to dive right in and ask you to introduce yourselves to our audience. Tell us a little bit about your journey and how you arrived to becoming venture capitalists. And if you'd like, maybe Fida, we can start with you and move on to Jen.
Sure. So how I started, Amar, I started actually as an entrepreneur. I pitched my startup for the first time on the stage of ArabNet, I think some 10, 11 years ago. Yeah.
Yes. Amazing.
I was the second place. I won second place in the startup demo, I believe.
Yep, in ArabNet Cairo, if I'm not mistaken, in 2011, just after the revolution.
Yep, exactly.
And there were 3 female winners at the time, Super Mama, and you, and oh, for the life of me now, I don't know if you remember the third, but.
I remember what the company does. So it was a parenting solution, remember? So,
yeah, it was amazing. It was 3 amazing ladies who won in ArabNet Cairo in 2011.
Yeah. So I think that's when I started catching that entrepreneurship bug. And I mean, I've started learning. That was the start of a beautiful journey. I think every few years, something new comes along, a new challenge comes along. And now with Jenny and Tamara doing Amam Ventures, which is an impact fund that is sector agnostic. So we invest in companies that are tech enabled, Omar, but they don't have to be, your typical tech companies. And I think we'll talk more about that as we go on. On to you, Jenny.
Cool. Thank you, Fida. Hi, everyone. Nice to meet you. My journey, started off in Sweden, studied in England, went on a trip to Africa, found love on a beach, followed my heart, ended up in Jordan, worked in asset management for a good number of years. So I'm the one with the investment background and wanted to work with something a little bit more impactful. So I got the chance to move into VC. So I worked for a venture capital fund here in Jordan for almost 5 years. And then, kind of building on that impact streak, I think the older I get, the more impactful I become. I had known Fida and Tamara for several years, and we started talking about, we need to do something about moving the needle on women's economic participation in Jordan and in the region. And we said, why don't we do this together? And the Amam Ventures was born.
Beautiful. And it's amazing. We were just talking before we jumped on about the percentage of women as founders in the region and the percentage of women as fund managers. I can think of maybe just a couple of fund managers in the region. Our data from our research, over the years, we've shown that only about 13% of venture-backed founders in MENA are female. So maybe, this is a good opportunity to hear a little bit more from you about Amam as a fund and what it means to be an impact fund for you. And if you'd like to go ahead, please, Fida, go ahead.
Sure. So we're a gender lens fund, Omar. We invest in companies that are committed to equality and inclusion. Companies that are, they don't have to be, women founders. They can be women founders or co-founders. They can have a certain percentage of women in senior management, or 50% of the workforce as women, or companies that are working on products and services that cater to women. This falls under the 2x criteria, which is criteria that the G7 countries had put out there. We didn't want to reinvent the wheel when it comes to our gender lens, and we wanted to, what we're trying to look for is to have really equal opportunities in the workplace, to change that percentage that you were talking about. Jenny, would you like to talk more about that and about our
Sure.
Yeah.
Yes, I think impact to me is really about putting as much value on social and environmental or gender type of components as much as we put emphasis on financial returns. It's about balancing the equation, right? Fida spoke about the 2x criteria, but it's all, we're not only looking at investing into women, but we need to put both men and women at the table, because really when both of us are there, that's really when the magic happens. So when we looked at the universe that we have, we did find that a lot of the companies that we spoke to, they don't really fit the typical, tech startup, unicorn wannabes type of models. So as we set out on our journey to design Amam Ventures, we really looked at the different type of funding instrument and different type of structure of our fund. So in that sense, we are different. We invest with different type of funding instrument to VCs. We do look at other type of companies as well than your typical VC fund would do.
Okay, and maybe you could talk to us a little bit more about that, about this idea of tech-enabled business versus tech business and what you're looking for in the businesses that you're investing in.
That's a good question, actually. So those tech-enabled businesses, Omar, could be any business around you. They're the traditional businesses across different sectors. Problem is those businesses are not well served financially by banks or VCs, and they're also the capacity building programs and the business development and all the cool boot camps that I got to be exposed to as a tech entrepreneur. Those are not available for the businesses in the creative sector, for example, in the tourism sector, the manufacturing, and so on. So when we look deeper at our universe and at our immediate pipeline, we found that women are clustering in certain sectors: education, creative sectors, services. When you look at those businesses, they make sense. They make, and economies are based on those businesses. They're based on those SMEs. They create jobs. They're impactful. They balance profit with purpose. A lot of them have a healthy growth. They've identified growth opportunities and they're trying to work towards them. And this is where we saw our opportunity as Amam. This is the gap that we're trying to fill in the market.
And does that mean, I'm curious about this, does that mean that you're going to expect to have a lower return than a VC fund would usually promise their LPs? And if so, how did you convince people to give you money for lower returns and more social impact? Really, and my question is to either of you. I'm happy to have this be flexible, or, but maybe Jenny, we can start with you on that.
Sure, and I think that's a really good question, Omar. And always when we speak about this and we look at how our funding return expectations are different from a VC fund, I always like to start off with a simple example. So let's take a venture capital fund. Let's say it's $10 million. And let's say we want to invest $1 million into 10 companies. Forget about management fees and all of this other stuff. 1 million into each company for 10 companies. We know, venture capital is high risk, high return. And we know that 8 out of 10 companies, they will fail, right? So if you take 8 million out of the 10 million, there's 2 companies where you put 1 million into each. Each one of these 1 million has to have the potential to make the return of the fund, plus maybe another 10 million on top of that, which means that venture capitalists, they need to go out and find companies that can make it really big, right? In order for them to justify, in order for them to be able to achieve those type of return expectations that they have.
Is that the 2x that you're talking about when you mentioned 2x then?
No.
Okay.
That's a different, that's actually a global movement. It was created by the group of G7 countries. So there's 15 DFIs that have committed to putting $3 billion towards women economic empowerment in frontier markets.
Okay.
So that's it's
totally separate. So okay, then talk about the return structure of your fund. If we were going to go for the hit them out of the park, 10x, what are you looking for?
Yeah. So the companies that Fida was talking about and the one that we look at, these are companies that need to have a proven model, and they have identified an expansion opportunity, and they need risk capital to grow. These companies have to be post-revenue. We don't fund ideas. There's not, the product market fit concept. It doesn't work for us. They need to have the chance to reach potential profitability relatively fast. So when a venture capitalist targets 10, 20, 30x, we would be looking at much lower return expectations per deal, but also our default rate, if you call it, would be much, much, much lower. Does that make sense?
Yeah, that makes a ton of sense. And personally, I find it challenging, and I've shared this with some VCs. They didn't really like it that much, but I find the ethos of growth at all costs that is driven by venture capital to be, I just can't say that it is having, always the positive effects on our ecosystem, our economy, and our societies. And this for me has been a key point in my, over the last 18 months, we've had a paradigm shift globally, asking us to think, should we be doing things just as we were doing them before, or should we really rethink what we're doing? So I love this model. I think it's extremely exciting. And I think tech-enabled businesses are going to be very powerful. But Fida, you have something to say. So I'm not the
I just wanted to say that those companies are actually called the zebras versus the unicorns. And there's also a global movement that we're part of. We're the Jordan champion for the Zebra Manifesto. So zebras, unlike unicorns, they are real creatures. They're real animals. They live in packs. They live together. They are, although they seem to all look alike, but each zebra has a very unique print. Those are the zebras. And the unicorn, that fantasy creature that everyone wants to aspire to become a unicorn, growth at all costs, as you just mentioned.
I heard from the word profit.
How many exits are we really seeing in the region? So
that is a great question. The exits and the liquidity. And I was just mentioning that I rarely hear path to profitability. Really late stage, they talked about profitability, but rarely do you hear investors excited about a company that's going to break even. They want to pump more money in. They want to grow as fast as possible. And it's often dominated by a winner takes all model within these markets. That's what they're looking for. Winner takes all models.
Yep.
So really exciting. I'm super excited about this fund. Yeah, amazing. So look, but there's been an explosion of new funds in the region. And I guess what I know now very clearly the impact orientation that you guys have. I would love to hear from you the size of deals that you want to do. We've heard a little bit about the sectors or any other qualifying features of startups that you're looking for. And how big is your fund? Any further details that you can tell us?
Go for it.
Sure.
So we're doing, Omar, a launch facility now. So we are looking to invest in anything between 4 to 5 companies in the next 18 months. Our target size fund is 30 million. Our dream is to basically be able to take this fund to different countries in the region, because we feel like this is a fund, this is an instrument, this is what, our region needs, this type of funding. We need to see more of those funds. So we actually, it has an impact, it has a gender lens, it has a financial instrument, a financing instrument that a lot of the companies need. So this is the big dream. As for our criteria, I mentioned the 2X criteria, which is our gender lens. As Jenny also mentioned, we look at companies that are working on enhancing their ESG performance. So we do want companies that are doing something for the environment or for society. And we invest anything between $250,000 up to $2 million. It doesn't have to be in one ticket. We do a lot of follow-on.
Yeah, and
Okay, great.
we're also sector agnostic, so we don't necessarily specialize or focus on one particular sector. We do, however, see that companies do tend to cluster in certain sectors. So that could be education, it could be health and wellness, it could be, you know, food and beverage. But again, we don't necessarily say we're only focusing on those particular sectors. It's all, you know, it comes down to the team at the end of the day that executes on the expansion opportunity that they have.
Great, thank you, Jenny. And I'll just note to everyone who might not have read the note from Michelle in our audience, and thank you very much for that, about the private equity impact funds in emerging markets achieving 11 to 18% returns, being very much similar to regular private equity or traditional conventional private equity funds. So thank you for that point. And ladies, I'm going to switch a little bit gears, and I have a bunch of kind of quick questions for you. You know, I want you to try to answer them in 30 seconds to a minute. We're going to ask you about the number one, name one. So they're designed to be fast. And I'll start with what do you believe is the number one challenge that entrepreneurs underestimate as they're growing or building their companies? And so Fida, we'll go with you, and then Jenny, and then on the next one we'll switch around.
Probably, I think retaining good talent.
Okay. Anything you would want to add to that about the nature of that challenge and why people underestimate it?
I think when, especially in tech startups, Omar, I think it's extremely difficult to really find the right team and be able to keep those teams and keep them incentivized. And it's a roller coaster. I mean, as an entrepreneur, you do sign up for that journey, but you can't expect the team to have the same stamina.
Great. Jenny, what's something you think entrepreneurs underestimate?
Oh, yeah. So, I mean, Omar, me and Fida and Tamara, our third partner at Amam Ventures, we're also a startup, right? And I think when I look at our experience, it's all about managing our bandwidth and making sure, are we focusing our efforts in the right place at the right time? I think that's a major challenge, because a lot of SMEs, a lot of startups, they have so many things that they have to do. They have to juggle so many hats and wear them at the same time, and really going after those opportunities that have the highest probability of success. I think that is a challenge. At least that's what we see as well. So
great. Prioritization, focus. There's a lot of noise out there. It's easy to get distracted. Okay, here's another one. Tell us about an early stage company globally that you find interesting or innovative, and why you find it interesting and innovative. Kind of what trend does this company show us that's interesting? And we'll start with this one with you, Jenny.
Oh, yeah. So I'm going to go with a company that's in the health and wellness space. This is the company that is capturing a global trend towards clean beauty and organic living. And, just basically, like, we're in Corona, we're in lockdown, people are so much more aware of their health and what matters. So this is the company that is producing skincare products that are, in my opinion, and I know I'm biased, I'm totally in love with it, but it stands out from the rest. This is the company that has the chance to become literally the next regional champion. So yeah, that's one that I'm really excited about. And that is a zebra, I would say, not a unicorn.
What is it called?
The company?
Yeah.
It's called Amina Skincare.
Amina Skincare. Amina, after the amazing introduction, I mean, I don't use any product, but I felt compelled to go out and maybe try some. Fida, a company that you're excited about globally and why it's innovative or very exciting.
That's a tough one, Omar. Can I pass on this?
Sure, if you want to pick, you want to pick one regional or any company that you've seen in recent memory that has made an impression on you and why.
So
or
there are a lot of
pass, we can also pass.
There are a lot of interesting companies, to be honest. So one is a company that's based out of Jordan that has a really interesting regional potential. Is a company that is transforming the way it's a train-the-trainer platform in Arabic, Arabizing the way that trainers are up to date with their fitness and so on. It started in Jordan, it expanded to Saudi, expanding to Palestine as well. So this is a cool company. It's called Jump Academy as well. It was a non-tech company for the past few years. And with COVID, they've started digitizing and they've offered their courses online with one of the universities, and they've realized that, there's potential there. So this is a company that's actually, reaching profitability. It's a hybrid between a tech company and an education in a traditional space. So I like that, the space they play in.
Wonderful, wonderful, great. Fida, we'll stay with you on the next question, and that is, tell us, what is the #1 challenge facing the entrepreneurship ecosystem in MENA today? And here I'll give a few options, or you can always choose other and tell me what you feel. Talent, funding, regulation, access to customers, or other, and then you name the other.
Actually, several of those, how much?
I know, that's why you got to pick one.
I mean, wow. So in Jordan, regulation is an interesting one, I would say. Funding is a big one because, again, we're here, but not every company out there. If you want to talk about an ecosystem, the ecosystem isn't all about tech startups. Not everyone wants to become the next Kareem. So I think we do need more funds that offer different types of funding. Yeah,
beautiful. And I think if we think that the tech economy is a small part of the broader economy, and the broader economy is going to become the tech-enabled economy, how is it that we don't have enough funds serving this tech-enabled economy?
Exactly.
Which I think is a big one. Jenny, what do you think is one of the biggest challenge?
Yeah, I think Fida kind of hit the nail on the head, right? And I would just add to what Fida was saying. We know that there's an access to finance gap in the region, but I also think that we need to talk about the financing instrument gap. There are banks, and yet there are VCs, and yes, there has been an explosion of VCs. We need to have more VCs, but we also need to have the different types of instruments there. So that's just adding on to what Fida was saying. I think another challenge out of the one that you mentioned is the access to customers. I think the region is so fragmented. In my previous life, I focused a lot on fintech, and it's a fragmented market, and it's not easy scaling beyond your borders, right? So I think, maybe a little bit of access to customers and regulations. I'll do a little bit of a mix.
You know what I actually think? Sorry, go ahead, Fida.
I have one more to add.
Do it.
So, Hamad, because we've been meeting with a lot of companies that are, again, not your typical technology companies, those companies are unpolished. They don't come with a ready deck. They don't come with a presentation. They don't even know they haven't perfected their elevator pitch. So those companies need a lot of support, a lot of help. So I think we do need that. We do need, and this is something that we're also working on, by the way. We have a program called Arkan, which, what we really want to do with Arkan is to strengthen a pipeline for the ecosystem, a pipeline of SMEs for the ecosystem. So, get them investment ready, whether that investment is, strengthening them enough to be able to apply for a bank loan or try to pitch to a VC or to a fund like us, but just that type of support that's really not available to the typical SME.
And I think, that 100% agree with you. We see this so much in the early stage. There's so much hand-holding that could be done. And in many other places, the pre-seed space is so active. The university programs play a big role in this. There's a closer connection between university and the ecosystem. And I think I see the need for especially more deal origination in a market where we have so many funds at the later stage. Okay, Jenny, our next one is for you. What is and just before I ask this one, to our audience, if you'd like to ask a question, I see we have one already, but please ask it using the Q&A module, and we're gonna get to those just after these rapid fire questions. So please go ahead and add your questions. And Jenny, the question to you, what is a common mistake that entrepreneurs often make when approaching investors?
Well, I think the common mistake that we see a lot with the companies that we meet is that they're quite modest in their projections. they want to be conservative yet realistic. But for us, there needs to be a balance between being conservative and realistic, but also getting us excited about the opportunity that we're funding. So that's something that's specific to the companies that we speak to, that approach us. I think the challenge for the startups that approach VCs is often that they don't think big enough. They need to think even bigger. Do you remember how I spoke about, you need to have the 10, 20, 30x potential? So yeah, I think that would be one challenge. Fida, what's yours?
It's funny, and just before I turn it over to Fida, I think some of the VCs who've been on here before you have said the exact opposite. But it makes sense exactly for what you're saying, right? When you're going big, go big or go home, you're overshooting. But when you're trying to build maybe a profitable business, you're being more conservative. So, but Fida, yeah, what do you think is a common mistake entrepreneurs often make?
So with the companies we see, it's definitely what Jenny mentioned. Also, it's self-confidence. They come very hesitant. We have to pull things out of them. And when you start hearing their stories, they're amazing. A lot of the SMEs that we're really talking to and really getting to know these days have been doing this for 5, 10, some of them 15 and 20 years. And when you talk to them, you still feel like they haven't really mastered the story, the narrative, their ask. They haven't crystallized that. So I think that's something that, the either pitching skills and presentation and communication skills, the softer skills, the executive presence is definitely something that needs attention.
Amazing. And building a good business and telling the story about your business are different things. And I totally see how people have amazing businesses, but can't sell that story in the way that they need to be able to, especially to investors. Amazing. And we are starting to get questions from our audience. I'll do one from Tamara, your partner, who asked a question to me. Are my partners awesome or what? And I say 100% awesome. So that's a quick one I'll be able to answer. I'm going to take a question from Michelle, who shared with us the statistic earlier, who herself is in the impact investing space as well. Can you tell us a bit more what you mean about investing in different types of companies with different types of investment vehicles? Do you mean cooperatives and nonprofits, revenue sharing models? Can you please expand on that?
You want to get this one, Jen?
Yeah, sure. So Michelle, we're not talking about cooperatives or the nonprofit models. Here it's more about the different type of funding instruments. So, they call it mezzanine type of financing. This is much more related to revenue-based type of financing, quasi-equity. We can combine equity with debt, and we can take a certain revenue sharing percentage out of that. The beauty about mezzanine is that you can structure it in so many different ways. We're very excited to be able to, be at the forefront of doing these type of deals in the region. And nonprofit, we are for profit. We want to make money, but we also want to have that impact component, right? But we're not in the nonprofit space.
And I've seen models that are similar I've read about this space a little bit, where essentially the business has an opportunity to pay back their investment through profitability, which is again encouraging profitability. Is that something that you would pursue as part of those instruments or thinking about this?
100%, Omar. I mean, I think, I spent 5 years in VC, and we know that exits are very difficult. So these type of instruments are self-liquidating. They pay off gradually over the period of the time. So from an investor's point of view, I remember we worked on an exit for 2 years just to see that it fell through. And then eventually we exited through in a different way, but it's very time consuming. It takes up a lot of the bandwidth of the investor. So self-liquidating instruments such as the mezzanine types of structures and what you're talking about, that's exactly what we're pursuing.
Wonderful. I'll ask another question from Barbara. How can we close the gap between microfinance and impact investment venture capital for companies too advanced for microfinance, but too small for venture capital? So maybe Maybe we'll go with Jenny.
With me again? Okay. Yeah. So yeah, I mean, I think both me and Fida, we serve on microfinance institutions boards, and we do see, you know, how to close that gap. It's such a big gap, at least between where the microfinance ends and where we begin. For VC, I don't think that there is a, you know, microfinance is a typical type of animal, and VCs are looking for the bigger picture. I don't necessarily think that there might be an easy bridge there, but for us, I think, how can we really help them on that journey and provide the capacity building programs to take them along the steps so that they can eventually reach our fund. And I think really at this point in time, and we should really speak a little bit more about our capacity building arm, which is Arkan, because there's so many programs in there that we really want to try and help the companies to move alongside that journey. Actually, today we were doing a series of videos. Fida was pulling her hair on some of them, but we're creating assets, digital assets, and kind of democratizing technical assistance so that these companies can move from the microfinance more towards our, let's say, ticket sizes and what have you. It's a long journey, and it's, you know, sometimes painful, but it has to be done, and we're trying to attempt to address that.
Sure. And there's a follow-on question, it seems, on this. Wouldn't equity crowdfunding bridge the gap between VC and microfinance? And I don't know, I thought maybe, Fida, if there's anything else you'd also like to add to Jenny's answer on this.
If I may add to Jenny's answer, I would actually like to talk a little bit about Arkan and what we're trying to do there and what we've done so far, actually. So, you know, we've been having those Tanweer speaker series, virtual speaker series and digital workshops for the past couple of years, and over 70,000 people have benefited from them.
Wow.
So we are really trying to move the needle on, as Jenny mentioned, democratizing knowledge, you know, that knowledge and those cool workshops and all that, they don't have to be limited to a certain type of companies. And, you know, look at us now, instead of booking a flight and being on a panel and being, and you know, having 100 people in the audience to watch this, you know, hundreds of people can do that. And that's what we've been doing. And then we've created 3 other programs. Each program is catered to a different segment. So we do have one that caters on early stage micro and small businesses. It helps them to start. It tackles, you know, the basics of financial management and, you know, that, you know, strengthening the base or building a strong yet very simple base to those micro businesses. And then we have one for it's an innovation bootcamp, basically, to strengthen companies and SMEs that are ready to take that next step and take their business to the next level. And then another one to improve the governance of SMEs while also creating the next pipeline of female board members. So we're trying to you know, have an impact and move the needle on different on companies in different stages in the ecosystem. I don't know if that answered part of your question. But
no, that's great. And I think this is something that people don't talk about as much within the startup ecosystem, but the critical role women on boards and how much it has been shown across the board that boards with gender diversity outperform boards without gender diversity pretty much across the board. Yep. So, and it's still amazing how we see so few women on boards. So I think it's very powerful. But Jenny, I interrupted you, please.
No, I think I just had a comment on the equity crowdfunding, right? Because if you put equity into a company, you're going to have to sell that equity to someone else in order for you to make a return. So you need to have a natural buyer at the end of the line, right? Maybe I'm generalizing, but in general, it's more difficult to have that natural buyer for your microfinance, for your SMEs. You know, people, you know, tech startups, it's easier to find that. And I think maybe that's why, you know, equity crowdfunding, it's a really interesting tool. For microfinance, I'm not sure. Another point I wanted to talk about with regards to the boards was our Get on Board program. Fida mentioned that. And you know, Omar, we have trained 20 women in senior management positions, and we had over 300 applications to attend a corporate governance training program by the IFC. So they became certified board members. Then we paired them with 30 SMEs that were run by women, and we set up advisory boards for them for the period of a year. So that program has been running now. We started it in October, and the response has been phenomenal. It's been really, really interesting. And we're also working on placing some of these 20 advisors onto, you know, corporate official boards as well.
And preparing for cohort number 2.
Yes.
In a few months.
Amazing. Congratulations on all of this. So I'm mindful of our time. We're just wrapping up. I have one more question that I'll ask you, which is, this is from me. And tell us about a time where you failed and what you learned from it. And it doesn't have to be big. It can be something small. It can be a deal that you lost money on, or a project that you were working on that you thought was going to be amazing.
We fail every day, Omar. We make mistakes.
Yeah, sure. So pick any
every
of them.
single day. I mean, yeah, I think in both startups that I've started, really, I mean, failure was a monthly thing. And there were times where, you know, it was bigger and and it was more difficult and more challenging, of course. But I think, you know, it's time to start celebrating failures, and we keep saying that, and we keep saying that, and yet nobody is celebrating failures. You know, I think I might have failed in my personal life because, you know, I married, my first marriage failed, so that's a personal failure. My first startup didn't work, so that's another failure. I mean, we fail every day, but if we don't fail, are we ever going to learn?
Amazing and courageous. Jenny.
Yeah, I mean, I have plenty of the failures as well. I guess we were trying to raise a fund. We managed to have really good level of commitments. We didn't reach large enough level of commitments in order for the fund to be sustainable. So it was rolled into another fund, which successfully closed. But I think the lesson learned would probably be, you know, do your work and let your results kind of speak for themselves. You know, let's be a little bit careful when, you know, you go out and you splash and you talk and things like that. And let the results speak for itself. I guess maybe that's what I would learn.
Beautiful. I love that too. And ladies, thank you so much for joining us. What an inspirational discussion. I'm certainly walking away from this feeling amazing. And I am proud that we've had you on our show today. And I hope that you can be a great model for the region of doing well by doing good. And wish you the best of luck with that. We thank our audience for joining us today. And we hope that you'll be with us next Monday for our last new fund interview. And until then, I wish everybody a good night. Thank you so much.
Good night, Omar. Good night, everyone.
Bye.